Hold on to your shorts. It's been a wild one. It's down 8. It's up. It's down. It's Microsoft is down. Then it's up. And then this and that and the other. Normal tech earnings. A lot of volatility around tech. A lot of misinformation. A lot of out and out lies. Record earnings. They've got to come up with some kind of bullshit reason that they're going to take the stock down. Somebody's trading big blocks after hours. Somebody's doing this. Hedge funds are talking their book. You really have to get a thick skin. Don't be emotional during these times. Generally, when tech companies come out with record earnings, it's fucking record earnings. End of story. All the minutia's, it's chaff. It's bullshit. Don't play into it. Just, you kind of got to, read through the bullshit and just kind of say, well, if the earnings are up 65%, who cares if in Asia they, some little project that they did lost money or, whatever, Semiconductors are the world's worst for that. Me and my buddy, we've been trading for 20 years and seeing this tech thing back and forth, different tech companies, and there's so much lying and misinformation. But what you need to do is just read the what the real news is, and a lot of the minutia that they pick out, and say, well, oh yeah, record great earnings this time, but the forward earnings don't look like they're going to be as good. The numbers are going to be harder to beat. So instead of beaten by 65%, they beat by 50% next time, Just take a grain of salt, take a breath, kind of play this down the middle, but know that there will be volatility around earnings. Volatility going into earnings, volatility at earnings, and eventually it will hammer itself out. Having said that, that was one of the reasons that I kind of stuck at 131. Kind of looking like a genius now because it's 131.81. It's not rolling it up to 137 when it, 134 or something like that when it was there. But no genius, just I know that there's a lot of volatility around earnings. And tomorrow it could be down and then up. And it could be up and then down. And so the next couple of days and even going into next week, there could be some volatility. Sometimes going into next week, what will happen is, now that all the news is out, where does the market have direction? And sometimes the market will slide. Other times people will go, well, you know what? In the past, what's happened is that they missed it, so people will start accumulating, and sometimes the stock will go up. Just know that these are the kind of things that happen around earnings. It's normal. Down 8 even for TQQQ is not particularly normal. But even when I saw it going down to under 28 this morning, I'm like, it's not likely to close there. Because there'll be some people speculating that earnings will be good, and so usually if you have something goes down like that, then it'll go back up. So I thought we would probably close over. I think I did a video and said we'd probably close over 131. So I thought we probably would. We were down pretty good after hours there for a while, but it looks like now we're down less than $1. So we'll see how this goes. We won't know until the market opens tomorrow and it starts trading, and people start taking stances or whatever. And even then, probably this thing will kind of even out the next few days. So hopefully we don't tank from here. Of course, selfishly, if I'm at 131, it's not a bad idea if it's around 131 on Friday for me. But if it's over 131, I don't make any more. I do have 300 shares that I sold the calls against. So even those, um, if the stock is around 131, then even those ends up being a good trade, and then initiating another trade later for next week would be advantageous. But looking really good right now. But we still got time to go. I mean, today's just Tuesday, so we got 3 more days to go. Wednesday, Thursday, Friday. We got more earnings coming out. But we will see. Let's see how this turns out. But right now, I think we're looking pretty good. The call was actually good of holding on to the 131s, so that's looking like a really good call at this point. But you never know. I just knew that there could be volatility, not that there would be. Now, it's possible by the end of the week this is back up to 136 and 137. I mean, that's a possibility too. So we'll see how it goes. It looks like at this point we're not going to get hammered like it looked like it might after hours earlier, to where we would be down, back down to 128 or something like that. So we'll see how this goes, and we'll play this, and then I guess we'll be thinking about what our next move is for next week when we see how this ends up this week. It'd be exciting if this ends up 131 around that, or a little bit over, because at that point I think I'll be at 57% on my IRA, and that's where my big money is. So I really track that a little bit closer. The $100,000 that we got in the cash account, that's grown from we put $100,000 in August of last year, and I think I figured up that we've made $97,000 on it since August. That is just incredible. Of course, we did it because the market was down, and but hey, if you buy when the market tanks and you got the cojones, you got the balls to go in and back the truck up, then you get credit for that. So taking credit for it. So maybe you look at that and say, well, that's kind of artificial, but to take the money out and say, hey, I'm doing so well in the stock market, I think I'm going to put another $100,000 in, and then get the $100,000 and put it in August, and then by next July, you've made almost a double. So we'll double that money in a year, it looks like, and wow, that's just spectacular. Just spectacular. So this is all going good. Right now we're just adding to the profits. I think we're 165,000 over $1 million now, something like that. We'll have more clarity next week once all these trades are gone through and I get all the figures and stuff. But it looks like it's going to be something like 165,000 over $1 million. So just in the stock market. So that would put us well over not having to use my wife's 401k. So we will actually, just in the Fidelity accounts, the $100,000 plus my IRA will probably be over $1 million at the end of the year. And it's possible that the IRA, I think we're at 800 some thousand now. It's possible that the IRA by itself could be over $1 million. So who's got $1 million in the IRA? I mean, that's spectacular. And remember now, there hasn't been any additions to the IRA. There was 135,000 in there in 2000 at the end of 2018, and so 2019 we had 140%, and then 62% in 2020, and then this year 57%. So I think we're at 822, something like that. 822. I could look it up, but from 135 in just one, two, 2.5 years, from 135,000 to 822. So this has been going really well. My tact on this right now is, if I were to lose 20% in the market, I wouldn't be distraught. But if I stopped doing what I'm doing now, and I look back and I can say, later, a few years down the road, and said, wow, I could have had $5 million instead of $1 million, then I'd probably be just punching myself in the head. That would actually be a bigger blow to myself. I don't know. I don't want to say ego, but it would be I would think, wow, stupid. Why did you do that? I mean, you know. So at this point, this formula is working really well. At some point, the music might be over, but at this point, I'm going to keep playing these triples and until I feel like I need to pivot. So looks like the bull market is still intact. One of the things one of my good friends says to me is, and he's I think 66 now. I think he's 66. Just turned 66. But he said when he came to the United States, the Dow was at 300, and now it's at 35,000. Something like that. So put it in perspective. Yeah, there's a lot of crashes, a lot of ups, there's a lot of downs, but if you just invest in the market as you go. And I'm a firm believer that people need to be a little bit more aggressive to meet their goals. Some people, what they do is they try to save their way to retirement. And you can do that, but that's a lot of work. If you get your money working for you and you up your yield, if you've ever done a spreadsheet with this over 15 or 20 years or even 10 years, you realize that it really makes a difference. If the difference between somebody making 6% and somebody making 14% or something like that is just a lot of difference. So